Hello everyone, welcome to today's video and this is your friend Bharat Shankar. So whenever we talk about passive income from stock market, the first thing that comes to our mind is dividends. Yes, there are many companies in stock market which share a part of the company's earnings regularly with their investors in the form of dividends. And this dividend income is kind of a passive income because whenever a company declares dividends on quarterly basis or annual basis, this amount keeps getting credited to your bank account. So dividend income is a great source of passive income. But it is not easy income because many investors find it difficult to earn dividend income because of two reasons. Reason number one is that it requires a large amount of capital, and reason number two, most of the companies or stocks which give high dividends are not known to perform well in the stock market, and many stocks end up giving negative returns in the long run. And that is the exact reason why you have to be extremely careful while picking dividend stocks and creating a portfolio that can earn you regular dividend income. So in today's video, we are going to exactly talk about this and we'll try to understand a practical way of earning a significant dividend income like 30,000, 50,000 or 1 lakh rupees, and to earn this kind of a dividend income, how much money or how much capital is required. And most importantly, we'll try to understand with minimal capital how we can choose stocks that give great dividends and also appreciate our investment in the long run. But before we go forward, I'd like to tell you that me and my team, we really work very hard to make such kind of a quality content for you guys. And if you want to appreciate our efforts, then all you can do is press the like button and like the video, and you can also press the subscribe button to subscribe to the channel. And most importantly, make sure to press the bell notification so that you don't miss any of our video which we are going to upload in the future. So let's continue, and now let's try to understand what is dividend in simple words. So whenever a company earns money, it has two options to utilize that money. Option number one, company can reinvest that money into the business and try to expand the business or grow the business. And if this investment delivers good returns, then it will increase the sales and profit of the company, which will in turn appreciate the value of the stock price, which will directly benefit the stockholders or shareholders. And then comes option number two. Now let's say if a company doesn't have any option or company couldn't find any opportunity where they can invest the money and grow their business, then company will simply decide to benefit the shareholders by giving away this money in the form of dividends. For example, if you take Reliance, then Reliance has announced a dividend of 8 rupees per share on May 2022, which means if you hold one share of Reliance, then you'll get 8 rupees as dividends on that one share, which will be directly credited to your bank account. And also as a share investor, when you talk about dividends, then it is very important to know another terminology related to dividend, which is dividend yield, because it is the dividend yield which is going to tell you how much percentage of returns you are making from dividends from the money you have invested in that particular stock or particular company. For example, if you buy a stock of rupees 100 and that stock give you a dividend of 3 rupees per share, then your dividend yield will be 3%, because you invested 100 rupees and on that 100 rupees you got 3 rupees as a dividend income, which makes your dividend yield as 3%. And similarly, if you look at a real example, then you can consider ITC as an example. And ITC is a well-known company which has a diversified business into cigarettes, fast-moving consumer goods, paper, cardboard, hotels, and many more. But the main source of earning for the company comes from its cigarette business. And the cigarette business generates so much of cash that they couldn't find potential business opportunities to reinvest that cash to expand or grow their business. So that's why a part of that cash is shared with the investors in the form of dividends. And ITC is one of those shares which has the highest dividend yield in the market, which is about 3.38%, which means the dividend declared by ITC alone has given about 3.38% to its investors. And now many of you might be thinking, how often does a company declare dividends? And the answer is a company can declare dividends as many times as the company wants to. And for this, again, if you take example of ITC, then in the year 2018, 2019 and 2020, ITC declared dividends only once a year. But in the year 2021 and 2022, ITC declared dividends twice a year. And whenever a company declares dividends more than once in a year, then generally this announcement is made with the announcement of quarterly results of the company. But however, the dividend payment frequency may vary from company to company. And with the discussion we had so far, I think it is pretty clear for you now that a company whose cash flow is very strong or a company which earns good amount of cash regularly declare dividends to its investors. But here some of you might have this question that, Bharat, there are many big companies like DMart who have a very strong cash flow, but they never gave any dividends to their investors. So does it mean DMart is a bad stock or a bad company? And for this, my answer is absolutely not. Because as I had mentioned earlier, whenever a company earns money, it has two options. It can either reinvest in its business, which will help the company to grow its sales and profits, which will benefit investors in the form of stock price appreciation. And if a company doesn't find such kind of investment opportunities, then the company give away a part of their earnings in the form of dividends to the shareholders or stockholders. And in case of DMart, the company is able to find opportunities to reinvest all their money or cash to expand their business. Because the company believe that reinvesting money into expanding their business will give better returns to their investors than distributing that money in the form of dividends. As simple as that. So now let's try to understand how to pick a dividend stock, which can effectively generate passive income in the form of dividends. So now let me tell you in the beginning itself that picking a dividend stock is a tricky trade. And why it is a tricky trade, let me explain. So if you take example of Indian Oil Corporation Limited or IOCL, then this company has a dividend yield of about 10.9%, which is actually a very high dividend yield. Which means if you invest 1 lakh rupees, then you are going to make around 10,900 rupees only from the dividends the company is giving to its investors. And now this high dividend yield is enough to make many investors think that it is a great stock where they can invest money and earn a big amount in the form of dividends. But before jumping into such stocks, you should also consider how much money or how much returns the company has generated for its investors in the form of stock price. Because if you look at Indian Oil Corporation Limited, then in the last 5 years, the stock price of Indian Oil Corporation has fallen by more than 44%. Which means 5 years back, if somebody had invested in Indian Oil Corporation, then of course he would have earned a handsome amount of money from dividends, but at the same time, he would have also lost 44,000 rupees because the stock price had fallen by more than 44%. And I gave this example on purpose just to make you understand that in stock market, there are many stocks which give great dividend yield, but the long-term returns generated by the stock price of those companies are very bad or very poor, which will effectively make you lose money in the long run, even though you are earning a great dividend from those stocks. And that is why the goal while investing in dividend stocks should not only to get dividends, but it should also be to get a good capital appreciation from those stocks in the long run. Which means the company has to give decent dividend and the stock price should also be capable of appreciating in the long run. So to put it in a positive perspective, a question how to pick dividend stock is a wrong question. The right question would be how to pick a great long-term stock which has a great business and can easily survive and grow for at least next 15 to 20 years. And generally, good long-term stocks are identified by their great fundamental strength, where the company's profit growth and sales growth is good and also consistent for a long period of time. And the company's balance sheet will be clean and the cash flow will be strong. And of course, fundamental analysis is a big topic in itself. And if you need a separate video on how to do fundamental analysis of stocks, then you can write your request in the comment section. And if we get good number of comments, then we'll definitely make a video on that. And there is a specific reason why we pick fundamentally great stocks which can survive and grow for at least the next 15 to 20 years. Because that reason is the exact key using which we can earn great dividends with minimal amount of investment. So now let's try to understand how we can invest a minimum amount of capital or minimum amount of money and prepare that investment to deliver great returns in the long run. So to understand it in a practical way, let's take an example. And in this example, we'll consider HCL Technologies, which is a IT company. So now if you look at the dividend yield of the company, then the dividend yield is about 3.7%, which means every 100 rupees you invest in this company, you are going to make around 3.7 rupees as returns only from dividends. So now let's say if you want to earn a decent dividend income of about 1 lakh rupees from HCL Technologies, then you need to have an investment capital of about 27 lakh rupees to 30 lakh rupees. And if I am being straightforward with you guys, then I have to tell you that investing 30 lakh rupees to earn 1 lakh rupees in dividends, then it would be a impractical, or to put it more rudely, it would be a stupid way of investing. Because if somebody wanted to invest only to earn 1 lakh rupees of passive income, then instead of investing in stock market or in HCL Technologies, a better and more safer way would be to keep a fixed deposit in the bank where they can easily earn more than 6% of returns without taking any risk. But now let's say if somebody wanted to invest around 3 lakh rupees and earn 1 lakh rupees increase dividend on that investment, and now I would say it is a great investment opportunity. And to make this investment opportunity work, you have to prepare your investment for the long term. And that's where the fundamentally strong long-term stocks come into picture, which give decent dividends and also has the potential for the stock price to grow in the long run. Because earning big dividends from a small capital in the stock market is a long-term game. So now to understand this in a practical way, let's come back to HCL Technologies. So if you look at the history of this company, then this company has been giving dividends way back from the year 2003. And ever since, this company has been giving dividends consistently every year. And along with giving dividends, the company was also a fundamentally strong stock, and the future scope for its business was really great. And now, considering these facts, that this company is fundamentally great and also give dividends, if somebody had invested 3 lakh rupees in the year 2012 to prepare their investment in the long run to get great dividends, then in the year 2022, their 3 lakh rupees capital would have been appreciated to 30 lakh rupees, because in the last 10 years, the stock price have appreciated by 10 times. And now if the company is giving around 3.7% of dividends, then it would easily make a lakh rupees of passive income only in the form of dividends from HCL Technologies. And this is the exact reason why I had earlier mentioned that picking stocks only for dividends would be a wrong approach. And the right approach would be picking great stocks which also give dividends. Because great stocks have a potential to appreciate in price in the long run. And when they appreciate in price, your capital would also increase. And on this increased capital, when you earn dividends, then you'll get huge amount of passive income only in the form of dividends. Which means you are in a win-win situation where you are earning money from the stock price appreciation and you are also earning a regular passive income from dividends as well. And this is the reason why most of the great long-term investors never prefer to sell their long-term stocks, because it's a win-win situation for them where they are earning money from both the directions. And of course, when you're going for long-term investment, it would also help to diversify your investment, because when you invest in long-term, you might also end up with companies like Reliance Communication or Yes Bank, which have eroded 90% of the capital of investors. And it would really help to manage such kind of a future risk by diversifying your investment across stocks of various market caps and various sectors. So to conclude the discussion, this is a practical long-term approach of creating wealth and also earning a great dividend passive income from the stock market. And of course, I understand some of you might have the concern that it is a very time-consuming process to earn wealth. And if you think so, then I would encourage you to write down in the comment section what do you think will be a more easy and less time-consuming ways to create wealth passively. So that's it for today, guys, and I hope today's video was informative. And if you think so, then please make sure to hit the like button, which will make the YouTube algorithm happy and help this video to reach to as many people as possible. And you can also press the subscribe button and subscribe to the channel, and most importantly, don't forget to press the bell notification. So thank you so much for watching. I will see you in the next video. Until then, this is your friend Bharat Shankar signing off.